We're here to talk about US dollar inflation and Bitcoin volatility, how to navigate the dueling forces, especially if you're running a business. So first about me, Marty Bent, founder of TFTC.io. It's a media company. Wrote a newsletter, website, a few podcasts, started 6.5 years ago, focused on education and conversations around digital sovereignty and freedom in the digital age. I'm also a managing partner at 1031, which is a venture fund dedicated to investing in Bitcoin companies, building out the infrastructure. Unchained, Zaprite, a few others working in this building are a few of the companies that we back. And so at 1031, we actually deal with this problem a lot, particularly focused on how the companies can focus on sats flows and building a Bitcoin treasury on their balance sheets. And I'm also a Bitcoin miner. I was one of the founding members of Great American Mining. We were one of the first in the oil fields doing flare gas mitigation via Bitcoin mining. That company sold to Crusoe about 1.5 years ago. I'm also on the board of Cathedra, a publicly listed Bitcoin miner up in Canada on the TSX, and I helped incubate Standard Bitcoin, where we're doing a dual off-grid stranded gas mining play and on-grid substation capacity arbitrage play, if you will. But we're not here to talk about mining. We're here to talk about the dueling forces. You're a business owner. You're looking out at the world. Inflation is running rampant. You have your balance sheet, your costs are continually going up, and you're trying to figure out how to deal with this problem. And you may identify Bitcoin as a solution to that problem. However, Bitcoin's volatility is pretty high historically. And so this creates these dueling forces of, you need to hedge your balance sheet risk because inflation is running rampant. And you think Bitcoin is a good solution to that problem. However, Bitcoin's volatility historically has scared a lot of people from using Bitcoin as a way to escape inflation. And so we'll start with the first half of the dueling forces, which is inflation. Obviously, this is the purchasing power of the dollar over time since 1980. As you can see, it's diminished pretty rapidly, and it's only getting worse. And to highlight the fact that it's only getting worse, I think Parker touched on this during his presentation pretty acutely, but I think it bears repeating to put this in context. And so I actually wrote a newsletter last week after the 15th anniversary of the Genesis block to put Bitcoin in perspective. Instead of focusing on how Bitcoin has changed over the last 15 years, I really wanted to focus on how the monetary and debt situation in the U.S. has changed over that 15 years. So if you go back to January 2009, when Bitcoin launched, the M2 monetary base was sitting at $8.27 trillion. And since then, it's ballooned to around $21 trillion. So we've added $13 trillion to our monetary base since Bitcoin launched in 2009. And then if you look at the total federal debt, that was around $10.7 trillion in 2009. And I'm sure all of you know we just surpassed $34 trillion. And I don't have these numbers on the chart, but I ran them in the newsletter. And if you look at the ratio of national debt to the M2 money stock over the two periods, in January 2009, that ratio was 1.26, and today it's 1.68. So put another way, the amount of debt expansion that has happened since 2009 has far surpassed the monetary base expansion, believe it or not. And as Parker Lewis likes to say, there's too much debt in the world and not enough dollars. And so to sort of fill this gap and for that ratio to revert back to the mean, that means that the monetary base is going to have to expand in the future, which means that inflation is likely to return, especially if the Fed begins to cut rates. So this is the first half of the dueling forces that you feel as a business owner. And I would say that I think it's pretty clear that inflation is not something that's been tamed. It is something that will continue. So it's something that you should keep on top of your mind. So getting into Bitcoin price volatility, here's the price chart going back to 2010. And as you can see, it's pretty volatile over time, particularly right now. I think today's volatility was around 5% for the daily volatility. We shot up to 49,000. We're sitting right below 46,000, I believe, right now. So this is very scary. And I think for a lot of people, if you don't understand Bitcoin, I think this is an important point to make, is take a step back and realize what's happening with Bitcoin and more broadly with humanity. Bitcoin represents a new monetary good in the digital age that is monetizing in real time over the last 15 years. And this does not happen frequently throughout human history. And so when you take a step back and you recognize that fact, the volatility makes sense. It's going to be volatile. We're essentially the monkeys in the beginning of 2001 Space Odyssey that had this large black rock dropped in front of us, and we're slapping it, trying to figure it out. So I think that's a big driver of Bitcoin's volatility over the first 15 years. That we have this foreign digital asset that is completely new, that nobody fully understands, and the price volatility is driven by waves of adoption of people coming, buying because the price is going up, seeing that it dumps, dumping it more, driving the price even lower. But then slowly but surely over time, as people take the time to really dig into Bitcoin and try to understand it, that information that Phil described, why there's only 21 million, that Parker described, why Bitcoin juxtaposed to the incumbent monetary and financial system has a lot of utility and can provide a lot of value over time. So over time, if we switch this to a logarithmic chart, the volatility doesn't seem that bad. We're going up to the right pretty consistently. And yes, we do have these waves of massive volatility, but more and more people are coming to understand Bitcoin and develop the confidence to put their dollars in that. So the volatility has certainly been high throughout history, but if you actually look at the charts, it has been compressing, particularly over the last 4 years. It is high historically, but it is getting lower over time as more people understand Bitcoin, become more confident in holding it for the long term as a savings vehicle. And just conceptually, this is that chart put another way, in a conceptual way, like over time, as more people become familiar with this, the volatility of Bitcoin will reduce as more people purchase it, drive up the liquidity, drive up the market cap. And this is a problem that's solving itself in real time with adoption. This begs the question, how do you manage these dueling forces, specifically as a business owner, trying to hedge your future risk of inflation and manage the volatility of Bitcoin? And there's many ways to do this, but I think the most important thing is the plan. Don't just ape in. Look at your balance sheet, look at your company, look at your cash flows, your profits, and make a plan. Just come with your Bitcoin allocation strategy saying, hey, I've got this much cash flow, this much profit each month. I'm going to look at the books and I'm going to allocate this percentage of my profit or my cash flows into Bitcoin and just putting in the long-term savings. A very important thing too is to invert the status quo thinking about Bitcoin exposure on your balance sheet. And what I mean by that is many people put Bitcoin on their balance sheet and then they worry about the downside risk, particularly with the volatility. They worry about how much money can I lose if I have Bitcoin on the balance sheet and the price tanks by 80%. And that's obviously something that you should be worried about, but I think psychologically changing that frame and really thinking long-term and saying, how can I capture as much upside as possible by holding Bitcoin on my balance sheet will really help you become more confident and develop a better strategy and plan to actually begin accumulating. You don't want to ape in when the price is going towards all-time highs. I run TFTC, and we monetize particularly via advertisements. And historically, we've accepted fiat and Bitcoin, but during the bull run of 2021, I got a little FOMO, and I just started sending everybody Bitcoin invoices and took Bitcoin only towards like the top of the last bull market. And that turned out not to be a really smart play. I had to sell some Bitcoin to manage the business. If you run a Bitcoin podcast in a media company, apparently ad dollars dry up in bear markets. So that's something you have to think about as well. But it's something I learned. I didn't have a plan. And that lesson taught me, okay, I got to have a plan going through these next cycles. I can't have myself be exposed the way I was in 2022 and 2023. But most importantly, I think from a framing psychological perspective, inverting that idea of trying to protect downside risk and focusing on how I can capture the most upside due to Bitcoin's value accretion is very important psychologically. So try to invert that, and I think that's a better place to begin approaching how to put Bitcoin on your balance sheet. And a good approach is dollar cost average. That's one thing we've been doing at TFTC is looking at our books each month, looking at the revenue we're taking in, our cash flows, and allocating a portion of that to Bitcoin every month. On top of that, for particular advertisers, they will send Bitcoin, actually prefer to send Bitcoin. So we'll accept Bitcoin from them, but then we just manage our US dollar cash flows and our Sats flows alongside to make sure we're not taking too much exposure risk. And I mentioned Sats flows. So Sats flows, what are Sats flows? Essentially revenue, cash flow that is denominated in Sats. And at TFTC, we have some really unique ways in which we do this. Podcasting 2.0 is a new platform that allows you to put a Bitcoin Lightning Network address in your RSS feed. So when people listen to our podcast, we have our Lightning Network address in there, and now there are applications, podcasting applications with Lightning wallets in them that allow users to send us Bitcoin as they listen and to tip and boost if they particularly like the content. And that has allowed us to create a sort of supplemental revenue stream and Sats flows that we don't need to touch. So any part of your business where you can incorporate Sats flows that are sort of additive to what your typical cash flowing producing operations are doing is a good bet. And that's all I've got. But I think, more broadly, just thinking about this, I think going back to the plan and trying to approach this methodically is very important. Don't succumb to FOMO. I've been guilty of it. Many people here have been guilty of it. Try to create a plan and then stick to the plan. Maybe if you have a higher cash flow, higher profits one month over the other, and you want to allocate to Bitcoin, you can certainly do that, but come to it with a plan. Don't just ape in.